Gold is not a bubble. Gold is never a bubble. Gold runs when dollar collapses. Gold runs when fiat X collapses. When an entire global system is in fiat X, Y, Z collapsing, gold runs double, 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 double trouble, said the three witches in Macbeth. You have real big, big trouble that's going to go on for a far bunch longer because the fiat debasement is real. And everything else that is needed and consumed is actually in a recession because the two-tier economy, the twisted balloon, the main part, that is you and I, is actually not doing great.
After tariff announcements, gold prices began to rise while the DXY started to fall. Notably, the US dollar's share of global reserves decreased by 0.62 percentage points to 57.8% in 2024. This trend suggests a broader effort by central banks and other large institutional investors to diversify away from the US dollar. Gold, as a universally recognized and politically neutral asset, remains an ideal alternative. Over the past 20 years, gold has delivered an average annual appreciation of 10%, with particularly strong performance during crises. FrancisHunt notes that by mid-2024, he was warning gold would vastly outperform oil, despite many still backing energy. With gold breaking near $3,900 as oil stagnates, Hunt argues the move simply mirrors a symptom of systemic fiat failure. While the middle class suffers through hyperinflation, central banks and hedge funds are quietly whaling into gold. FrancisHunt notes that the BRICS nations are also aggressively accumulating precious metals and building parallel systems. They're avoiding confrontation with the US, but are steadily and decisively moving away from dollar dependence. The shift to gold hit an inflection point earlier this decade, with the volume of central bank purchases of the bullion rising 140% year over year in 2022 to over 1,000 metric tons. This sharp acceleration began with the seizure of Russian reserves following Russia's invasion of Ukraine. According to Hunt, policymakers will deliberately squeeze the public through recessions, market crashes, and higher rates to consolidate ownership of assets. Gold's sustained rise is the clearest signal of this structural shift. Before we dive into FrancisHunt's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
We were talking about it in 2024 during June on an inverted head and shoulder. And we were putting those YouTubes out and saying, guys, you're going to have a massive overperformance on gold and a bad underperformance in oil. And we had a lot of people, including our good friends like Chris McIntosh, that were still positioning in oil. That's not to say they've done badly. He plays a very smart game. But we were saying don't preferably overweight the energies complex on the basis of an inflation trade. We are in a recession for the masses, and have been for an extended period, which is why the oil price, Rockefeller tax, has to ratchet its way down, crush consumer, less buying on Amazon, less delivery, less everything else. And at the same time, you are in a fiat and debt debasement and a charge into a reserve asset. This is why you've gone from 14 barrels bought at the low there to 63 today. And this is a major reversal that we continue to expect to happen. It performed to our target, and as per HVF method rules, we said you're likely to have some form of a pullback during that period. During that period, we got the daily setup on gold where it went essentially sideways and created the next HVF. From April, where we got the 3,500 Trump tariff tantrum spike when dollar went down, rates went up. Note the rates going up, but the dollar went down, and a major charge into gold that ran up to 3,500. Then you went sideways around the 3,300, 3,350 level for the better part of April, all the way through to September when we broke out the late part of September, and we put leverage trades back on for the run through the 3,770 range, which have seen you actually trade into 3,800s, going almost to 3,900s, a typical degree, although a nice firm degree of overperformance to our leverage trade. That has been going on, and at the same time, the oil price is stagnant and low, and this is in an environment of dollar debasement. The gold price is highlighting that. The inverse parabola of the gold price, in other words, that parabola you watch on the quarterly mark when you do 3 months chart, that parabola is the loss of buying power of your dollar when you invert it. It's simple as that, and that's the game you're in. We get criticized for talking about hyper-stagflation. David Hunter says there's no stagflation. In fact, you're undershooting the Fed's inflation number, he says. And other analysts think the same. There is no inflation. You are coexisting in an environment of both major loss in recession in real terms adjusted, for which the only measure for your inflation is the whaling into gold. Gold is not a bubble. Gold is never a bubble. Gold runs when dollar collapses. Gold runs when fiat X collapses. When an entire global system is in fiat X, Y, Z collapsing, gold runs double trouble, said the three witches in Macbeth. You have real big trouble that's going to go on for a far bunch longer because the fiat debasement is real. And everything else that is needed and consumed is actually in a recession because the two-tier economy, the twisted balloon, the main part, that is you and I, is actually not doing great. It's not doing great. Salaries are not moving at the rate of true debasement of fiat. People are looking for second jobs on the Google trends. Second jobs, please, more shekels. Must work harder. It's really tough to survive. Lots of financial stress all around. I feel very badly for those people. Having positioned better than them, though, I am very fortunate and very grateful. And I want you to feel fortunate too. Do the right things. We spoke of this a year ago here in June, and everybody else is talking about it now in October of 2025. The reversal in this ratio was clear to us quite some time ago, and it is, again, like the bond market trade, a seminal indicator of hyper-stagflation, an extreme version of recession for the masses, on the basis of a debasing currency in an inverted parabola, whilst at the same time, a rush for the rich, the central bankers, the hedge funds, the home offices, all whaling into gold, leading to an absolute similar parabola to the upside in XAU, driven also by the BRICS nations bifurcated that can see the Ponzi collapse, but don't want to talk about it too much. They don't even want to intimidate the Americans. They could dump their treasuries and crash the market. That would be an act of financial war that would very quickly lead to an act of physical war. So they are just quietly buying the absolute bejesus out of the gold, silver, and platinum markets. And so they do, and set up a parallel system. If you want the news before the news, you come here for HVF Method. You find it out in the community here first, the key macro trends for the people who have actually got the correct economic framing as well that goes with the technical hit-me-ups. It's because of these technical hit-me-ups of a reversal in the relationship of these two commodities that we can make the economic predictions and biases that we have made, which I continue to assert is the correct. Inflation and recession are not mutually exclusive. They can coexist, especially when you have bifurcated economies, two-tier justice systems, two-tier economic systems, or some of which are status supported, building out server farms and coding and doing that, and everybody else being starved of capital, access to capital in a recession. It suits them that you be in a recession. They need you squeezed so that when they crash the stock market, they can finishing you off. When they crash the housing market, they can finishing you off. And when they spike the interest rates, they can finishing you off so that they own your stuff. And no, tokenization is not your friend.
Recession risk for 2025 is viewed with cautious optimism by some institutions, such as the IMF, which projects global growth to avoid recession in its July 2025 outlook. However, the risk remains significant, with institutions like JP Morgan and the IMF reporting a considerable probability, at 40% in the second half of 2025. Regarding the oil market, FrancisHunt points to its drop near $60 as a clear signal of a hidden recession despite rosy official data. He stresses that money supply growth is always inflationary, driving up living costs even in a weak economy. Hunt warns that tariffs, subsidies, and cash handouts only fuel debt and debasement, while true protection lies in real assets, such as silver, not in government checks or promoted tokens like Bitcoin. Oil prices are falling due to anticipated supply increases from OPEC+ and a slowing global economy, while silver prices are rising due to strong safe haven demand and signs of increasing industrial demand. However, profit-taking and dollar strength can temporarily pressure the metals. Let's get back to the interview.
Let's have a look at oil. What's happening with oil? What's happening with oil? In debased dollars and gold ounces, it sure as hell hasn't been doing well and is looking very, very sick. Please give me a correct oil chart. There you go. That's what's happening on oil. That's what's been happening on oil. We've been shorted. We told you about the 80 levels, great shorts. You got another chance there, shorts. You're trading barely in the 60s. $60.89, $60.89. You lose 89 cents and oil falls into the 50s zone. And you think it's a strong economy. You think you're not in a recession. Everyone, we're not in a recession. We're not in a recession. You don't have honest statistics. You can't even work out in real terms. You can't have a GDP of mid-3% a month on fake inflation numbers. You don't get real-term growth if you don't have an honest CPI. The next great lie to be exposed is the CPI. We called the labor 3 years ago. We kept calling it. It's been exposed. You're not as strong. Now they are focusing a little bit more recessionary. You're already in and out multiple recessions at the moment. That part of the economy, the twisted balloon, Main Street is there. At the same time, your cost of living is continuing to climb. That's the fiat debasement, and that is inflationary. All expansion of money supply is inflation. We have our friends Henrik Zeeberg and others that say it's not inflation. Sorry, it is. The minute you are borrowing more than you get in income, it's inflation. It's a fact. But you can also experience a contracting economy in that environment while seeing base consumer costs going up, because the expansion of money is inflationary. And even if you're in a disinflationary time, let's call it CB19 lockdown, where you have a major slam down, what you actually have is a chronic amount of stagnation brought about by the shutting of the economy that is overwhelming your degree of inflation that you're doing. And then we did even more inflation and printed 7 trillion, etc. And then we made sure that the extreme forces of inflation was now countervailing those that were disinflationary. Both existed at the same time, like good and evil. They both exist. You don't have neutrality. It's not binary. The world isn't good and it isn't suddenly pivoting to bad. There's both all the time. And that's how inflation and disinflation operate. Tariffs are, on the one hand, inflationary. They are a tax that makes things more expensive. On the other hand, later and longer in, they are reducing the amount of trade, making things more expensive, reducing the size of the pizza. It is stagnatory. It is disinflationary to the growth of the economy. Instead of expanding everything, making a bigger pizza, you are reducing the size of the pizza by reducing global trade and by putting costs on it. It is a tax on the American citizen. And now, Donald J. Trump, the full name, the original name, he's a name flipper. You know who the name flippers are. They do like a bit of name flipping. Yes, Trump is going to give you a subsidy. He's going to give you a rebate against tariffs. But hold on a minute. All the money he's got on tariffs is going on farmers that he destroyed in counter tariffs. Just the soybean farmers alone, he's committed 16 billion to on his net gain of 23 billion. Plus, at the same time now, he's going to bail out all of America. $2,000 for every American citizen, times that by 300 million, and work out how much that's going to cost you. Wow. or let's even say 1 grand, 1,000 for 300 million people. Add those zeros in, my friend. 300 million, that goes to 3 billion, 30 billion, 300 billion. Wow, that's starting to get expensive. Where does that money go? Onto the debt pile. More inflation and debasement for you. We gave you some money. We're so kind. I am the benevolent leader, president. I gave you some money and I devalued your money at the same time by even more. And don't forget, the administration and the government needed to do that, and all the costs associated with that. It's not just like they get it in, they send it out. No. Administrators, government officials, appointees, hotline. I didn't get my grand. Where's my grand? Oh, you didn't send it to me in Monero on a private chain. No. We only do this. We can only have it in shitcoin, XYZ, World Liberty Finance, or Trump or Melania token. Okay, that's great. Go grab your $1,000 and go watch your money debase. A once-off sum of $1,000 to the average American. What do you think goes on there? The most useful thing they could do is give them ounces of silver. That's the truth, but they won't do that. At $50 an eagle, they could give you 20 eagles. Is that right? You're going to get 3 zeros? Yes, 20. I did the math right this time. 20 eagles, $1,000. You could get 20 eagles. Do you think they'll send you 20 eagles? No. Amazingly, America is offering, in other news, to buy resources from Australian companies and invest in Australian companies. But they push Bitcoin. But now they're massive acquirers themselves of resources. They've suddenly woken up and they want to buy resources while telling you buy Bitcoin. Bitcoin's the thing, they tell you. Bitcoin is the thing, they tell you.
The recent U.S. government shutdown has restricted the release of key data, limiting the clarity central banks and investors typically rely on. With visibility reduced, investors have looked to gold as a reliable position in uncertain conditions. Although the rally leaves room for short-term corrections, longer-term dynamics remain constructive. Central banks are maintaining their purchases, exchange-traded funds continue to record inflows, and physical demand in emerging markets has stayed resilient. Will individuals act early to secure tangible assets, such as gold and silver, or wait until the system's cracks become impossible to ignore? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.